Alright, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good crypto news for you today. Still in that super bear market and ever lower as every day approaches. But the first thing I want to talk about is the Bakkt Bitcoin futures contract is going to begin on January 24th. So it was going to begin on December 12th, but it has been pushed back again. I think this is the second time that has been pushed back. So at this point, who knows if it's actually going to be January 24th or not. Now, a lot of people are pretty excited about Bitcoin futures. The way that Bakkt does it is going to be a lot easier for institutions to buy Bitcoin because there is a problem in institutional Bitcoin, and that problem is who's going to hold the private keys? Who can you trust to hold the private keys of Bitcoin in the futures in institutions? Well, Bakkt fixes that in ways, and hopefully that will be a price raise of Bitcoin and crypto in general. Now, I'm personally, not very pleased, not very impatient for institutionalization of Bitcoin, because that doesn't make any sense whatsoever if you really think about it. Bitcoin was made to be mined on a CPU or a GPU and then, well, eventually ASICs, but who can stop that, I suppose. But it was made to be mined by the people and used by the people for the people kind of thing. I hate to use that sort of cliche, but it really is. It was made for the people, by the people, kind of. And you're supposed to just mine it and then spend it, send it, hodl it, save it, whatever. But when the institutions get into it, that's sort of like government stepping into it. And not necessarily government, because the institutions aren't necessarily federal, but you get what I'm saying there. It just doesn't really make sense once it's so mainstream. Is it really Bitcoin anymore? And it is, but as you can see, they're not really going to do anything for you, or for me, the consumer of Bitcoin, the user of Bitcoin, the miner of Bitcoin, the hodler of Bitcoin, right? They're just going to raise the price, maybe, and then they'll maybe dump the price as well. So, sure, your portfolio will go up in value, but they're going to take all of the Bitcoin. Let me just say that. They're going to take all of the crypto and whatever crypto they add to their futures contracts, etc. in the future, right? Because we're talking millions or billions of dollars in futures, and that is something that the average person like you or me does not have, and we would consider that a whale. And it's okay to be a whale, but the more and more institutions that are getting into it, the more that they're just going to hold and the less that you're going to be able to hold, which, again, could raise the price, and if that's all you're concerned about, great, but it just doesn't make sense to me. Moving on to the next topic here, U.S. is investigating if Tether illegally moved Bitcoin to 20K. So it's starting to really come together. Now, I know Tether has been a story for like a year now, and you might be like, old news, boring, and, well, kind of is, unfortunately. But whether it being old news or not, nothing has really ever happened to Tether. They were supposed to be audited, and then they're like, let's just fire our auditor. That's like if the IRS came to audit you, and then you just fired them. And you're like, no, there's nothing going on here. Just go away. You know what I mean? That's like, well, maybe there is something going on here, right? If you fire your own auditor just before you're about to be audited, that's kind of weird. That is a little bit weird. And then it's not even just weird. They might be like, well, there was a problem with it. Maybe he was a drug addict and we had to get rid of him. He was crazy, right? But that doesn't explain why you didn't hire a new auditor to audit and then just like quell everybody's crazy thoughts about Tether, right? That could have been a thing. But because they didn't, leaves it up to conspiracy theory, to be totally honest. If you refuse to get audited, well, maybe there's a problem. You know what I mean? As reports of November 20th, citing 3 people familiar with the matter, Tether and Bitfinex, which share a CEO, under suspicion of market manipulation. You think? Well, no formal accusations, have yet been made. The U.S. Department of Justice is investigating the pair's potential role in fueling Bitcoin's all-time price highs of 20,000. According to the unnamed sources, prosecutors have recently honed in on suspicions that a tangled web involving Bitcoin, Tether, and crypto exchanges, Bitfinex, might have been used to illegally move prices. Yeah, it's kind of looking that way. The Commodity Futures Trading Commission, the CFTC, originally subpoenaed the two businesses in January this year, months later denying a Freedom of Information request to examine what exactly the regulator thought had occurred, which was against the law. Both continue to function as normal, while commentators differed in their opinions as to whether Tether issued impacted on Bitcoin's markets at various times throughout the year. So executives have meanwhile issued official responses to various accusations in recent months, Bitfinex remaining adamant that any rumors of wrongdoing were malicious hearsay. They're just hearsay, malicious hearsay. Don't audit us because it's just hearsay. You're messing with our freedoms. I don't know. Whatever. You can't audit us. We had an auditor, but we fired him. There's your proof. That's all you need to know. These included doubts over the exchange's solvency, which constituted the most recent debacle last month. How any rational party could claim insolvency when the opposite is there for all to see is interesting. Once again, perhaps indicative of a targeted campaign based on nothing but friction, the response read. Right. But it isn't all for us to see because you fired your auditor. Remember that? What? Whatever happened to that? Did you want to comment on that? On how you fired your auditor and then just didn't bother to hire a new one to, just to calm everybody's opinions? So as Bitcoin loses over 30% this week, monitors have noticed mass transfers of Tether's US dollar tokens, including a batch of 50 million Tuesday from Tether Treasury of Bitfinex. In the past, sales of freshly minted tokens have sometimes coincided with a rebound in Bitcoin price. Wow, you think so? Who would have thought freshly minted tokens would rebound a price? So moving on to the next article here. Ethereum crashes whale movements. Ethereum prices are in free fall, and a large-scale transaction may be one of the reasons for the rapid drop. A wallet that received 380,000 Ethereum from the Genesis wallet sent 2 large transactions, in effect emptying out the previous addresses. The receiving wallet is an unknown whale account with more than 454,000 Ethereum. Another transaction of 115,000 Ethereum came from a different whale wallet, suggesting some form of reorganization. So far, the wallets have not sent the funds directly to exchanges. The move was seen as a sign of capitulation and loss of trust for Ethereum. Additionally, Ethereum was part of the pre-mined stash that also raised criticism of the Ethereum project. The general market crash saw Ethereum prices drop precipitously, losing more than 31%. Ethereum is down to $113, losing almost half of its value since it hovered over 200 for weeks. So rapid selling and activity saw Ethereum trading spike to above 3 billion, which is unprecedented volume. However, there are expectations that Ethereum may not survive and would return to double-digit prices. Ethereum has been weighed down by the fate of tokens, which are also viewed with skepticism. So the role of Ethereum as a utility token has added to their price depreciation, or price depression, I suppose the same thing. Selling by ICOs and miners has kept the prices low. Additional periods of high volatility trading have hurt prices. So usually it's ICOs. So whenever you see an ICO and they're like, hey, you send us 1 Ethereum, we give you 500 blah, blah, blah tokens. Well, the reason why they want Ethereum is because they need that gas to distribute those ERC20 tokens because they made a smart contract ERC20 token. And so then they end up getting just thousands upon thousands upon thousands of Ethereum, and then eventually at some point these ICOs just dump them en masse. So that's why we see these pretty wild fluctuations of Ethereum. At the same time, Vitalik Buterin's wallet remains untouched, with 365,000 Ethereum unmoved for many days. Buterin has been known to discourage speculative trading and not speak in support of high Ethereum prices. The drop in Ethereum was also damaging to investors as the coin was seen spiking as high as $5,000. Well, that's what people thought it was going to be. Ethereum did not manage to hold on to the levels of 1,000 for long. The project sees its chief use as a fundraising means for ICOs. Slowed down in the past months, ICOs have raised just $76 million in November, which sounds like a lot, but compared to last year, not much at all. So moving on to the next article. Get ready for mass shutdowns of crypto hedge funds, Morgan Creek's CEO. So on Monday, November 19th, Anthony Pompliano, I love that name, Pompliano, co-founder of Morgan Creek Digital, published a blog post warning that we might witness a wave of cryptocurrency hedge funds shut down at the end of 2018. He argues that numerous crypto-related businesses are in big trouble, you think? And that pretty soon they might close their doors as a result of this year's dramatic price collapse. Current digital assets bear market has been taking a heavy toll on many crypto businesses, including hedge funds and ICOs, pose further serious risk to them. According to Pompliano, a highly respected person in the crypto space. Ironically enough, a good many of crypto hedge funds might shut down at the end of 2018, not because they haven't made enough money, but because they have made too much money earlier. Right, sure. Anyway, so we do see a big problem, and, people wonder why there isn't a mass adoption of crypto just yet, and you're seeing it now. You're seeing it now, literally. So if Walmart or Amazon or some other big corporation decided to take cryptocurrency and they accepted it at 20,000 or 15,000, 16,000, and now it's down to 4,000, the risk of them losing too much money is way too great, because they're talking about taking in millions of dollars a day or something like that in crypto, and to lose millions a day by just the price going down is way too much. So this is a pretty long article. We're not going to get into the rest of it, but it does make a lot of sense. So there could be a lot of crypto hedge funds that shut down because of this. Now, it did say because they're not making enough money, but I think because they're not going to be making enough money. Nobody really wants to go on a downward market like this, except for futures. So, Bitcoin rallying from under 1,000 over 20,000, then right back down, is really, really hard to invest in. It's really tough, and we're all feeling that burn quite a bit. So I wouldn't be surprised if we're going to see a year in 2019 of another stagnant year, and then perhaps 2020 will be a breakthrough. But we'll have to see how Bakkt, futures help the price of crypto. Again, I'm not too excited about it because it's the institutionalization of crypto, which is just totally defeats the purpose of cryptocurrency. It makes no sense to me. Even with a rise in price, I don't feel it's going to be worth it. I feel like we're at the beginning of the institutionalization of Bitcoin, which is not going to be good. We're all going to remember this time with rose-colored glasses. We're all going to remember it in retrospect. Hey, guys, remember when you used to be able to sign up to an exchange with just an email address and a password and be able to buy and sell crypto? Yeah, I remember those days, but now everything is so regulated. Everything is like stock now, where it's really difficult to get into, and only $8 a trade. Things are going to get crazy the more and more it is institutionalized. So prepare for that. So I wanted to give you guys this little picture here. This is funny. Fake Toshi gets put in his place. If you don't know who Fake Toshi is, Greg Wright. There you go. Crypto appears to be skillfully controlled by the elites and is no longer the anarchist utopian it was in the past, if that was ever true, which I think it was. But that's a really good title. Now, I didn't read this article, but that's a really good title. It appears to be controlled by elites now, which is true. We have literally Bitcoin Cash and Bitcoin at a war. Well, mostly just Bitcoin Cash. So we have two Bitcoin Cash whales at a war. So we got like Jihan Wu and Roger Ver over on one side with ABC. Then we got Craig Wright and gang on the right with SV. And they have literally crashed the market. Two groups of people have crashed the crypto market to unfathomable levels, to levels at which that S9 miners and other ASICs are just not making any money. Who is making money mining Bitcoin anymore? Everybody's operating at a massive loss. And how long can that loss go on? That's the question. Now, you might think to yourself, well, okay, it's fine to operate at a loss for a little while, and then when Bitcoin goes, woo, through the moon, everybody's going to make a lot of money. Well, that's great, but how about an entire year of losses? How long can people pay that electricity bill of an entire year of losses on these Bitcoin miners? Now, GPU mining is a different story. It is somewhat profitable, and people are making barely a little bit of money, and it might just be a hobby too. You just find it fun. You just got to do it regardless, even if you're losing a little bit on electricity. That's fine to you. But it appears to be controlled by elites. Everybody, the only people that are making a ton of money are those who run exchanges. Coinbase made, like well over $1 billion in profit in 2017. There's Binance and the creators of hardware. It's always said that the creators of the hardware are the ones that make the most money, no matter what, right? The people that are making the GPUs, they don't care if the price of crypto goes up and down, right? They're still going to sell their GPUs. The people that are making the ASICs, it doesn't matter if the price of crypto goes up or down. Well, maybe a little bit, perhaps it affects their sales a little bit, and especially if Bitmain is mining on their own ASICs. But, you know, they're making money hand over fist, right? The people that are making FPGAs, the people that are running the exchanges, the people that are running the websites, they're the ones that are making all the money, right? They don't even need to be in cryptocurrency. You know, they could do nothing with crypto, and just every day they're just racking in money from exchange fees and stuff. So, kind of, it's starting to get like that. It's starting to get that the whales are the only ones making money because all they have to do is market sell, and boom, it goes down $500, and then other people just start selling, and then they just pick up again, and you can do that again and again and again. So here's a really, really, really simplistic way that a whale can make a lot of money. Let's say you got millions and millions of dollars, okay? Boom. You got millions of dollars. So what you do is you buy Bitcoin over the counter, so you don't affect an exchange at all. You don't affect the price at all, or the overall average of all exchanges, like CoinMarketCap or something. And you buy a bunch of Bitcoin over the counter. Then you put it on an exchange, or you put it on multiple exchanges, and you market sell it. Boom! You just drive the price down. Then everybody sees that. They drive the price down further because they say, oh, it's time to sell. Sell, sell, sell. So everybody's going to sell. It's going to drive the price down even further, perhaps more than what you just drove the price down. Then you just buy in, and you do it again and again and again and again. And it's super, super easy. I know that's super simplified, but that's basically it in a nutshell. And since it's not regulated, you can just infinitely do that. You know, here's Dr. Craig S. Wright, Marxist dribble, and this person comments back, drivel. Nobody with such poor understanding of his first language should be leading anyone in anything. Ouch! Oh my God, Dr. Craig S. Wright, get wrecked in the face. And I want to show you guys this before we look at CoinMarketCap. Let me turn this off here. So October 1st, the first discovery. Oh, wow. And then October 2017, the initial purchase. Everybody's so happy. Look at them. They're just so happy. Insane gains in November. This guy's really, just look at him. I think he's getting blown under his chair there. December 2017, extravagant purchases. Oh, my God. There's just, oh, wow, so many purchases. January 2018, first taste of blood. Uh-oh. Oh, my God. Oh, crap. Uh-oh. February 2018, gambler's fallacy. Okay, we're gonna try Ethereum. Oh crap. Things are looking bad. March 2018, self-reflection. Now we gotta go outside, and we just gotta wonder what's going on here. For many, many months, as nothing happens throughout the course of 2018. November 2018, reality sets in. Oh my God, it dumps again. No, what's going on? Uh-oh. Now we got twisty face. We got wrecked face. And December 2018, capitulation and divorce. Happily signing the divorce papers. Good job. Good job. All right. Crypto. What a ride, huh? What a ride. All in 1 year, guys. Woo! This is a wild ride. CoinMarketCap, $144 billion. We are really low. It seems that Bitcoin Cash has retaken number 4, as not that it really went up in price, but rather Stellar went way down in price. You can see the big dump here. So yesterday, Stellar actually took number 4 for a little while, but since it dumped so hard, it actually just went under Bitcoin Cash again. So there is a fight over number 4 and number 5 there. XRP way over Ethereum at this point. Ethereum is way, way down. So XRP is now officially in that number 2 spot for what I would say is quite a while. Bitcoin dominant still at 53% though, so alt's still losing more than Bitcoin is, according to that. But we'll have to see how things go. $4,300. I didn't think we could get this low. I really didn't think we could get this low, because if you take a look at you know, ASICs right now, the average ASIC I would say is the S9 miner. I know there's the S15 and there's various other you know, various other ASIC miners out there now that are like 30 terahash, 25 terahash and stuff. But still, I would say the most mass-produced ASIC ever made so far was the S9. And that's probably what the majority of people have. If you know a friend or you have one, or you have an ASIC, likely it's probably an S9, maybe a script miner as well. And so those are making, you know, negative $3, negative $4 a day now. I would hate to see mass mining operations where you have just hundreds and hundreds of S9 miners in a warehouse or something, because this price right now is so low that I can't see anybody making money mining Bitcoin right now. And even GPU mining is likely either barely profitable or unprofitable at the moment. And sure, there's a few cryptos that pop up every so often on what to mine that you can mine and make a little bit of profit off of, but not for very long, at least not long enough to make any kind of significant profit, unless you have a gigantic operation and mine just so much in a short period of time. So very weird. And now some people were saying on my channel, well, they were asking the question, well, since profitability is so low, wouldn't people stop mining and the difficulty go down and then profitability will come back? Well, sure. The difficulty will go down if people stop mining, but if people stop mining and the difficulty goes down, people are going to recognize that the difficulty went down, and then they're going to turn their miners on again, make a profit until that difficulty rises again, and then we're going to be back in the same thing. So here's the thing with that. Difficulty will always stay the same or rise, or somewhere. Ethereum is lowering a little bit for the most part. Hash rates always rise and fall. But for the most part, over time, they always rise because people are plugging in new GPUs every day. People are plugging in more ASICs every day. More ASICs are being produced every day and being plugged in. So it's not like those ASICs are going away. They will always continue running. People will always still run these ASICs and keep the difficulty high. So when it comes to profitability of mining, it's not only the difficulty, it's also the price. The price and the difficulty have to be reasonably so that you're making money every day, so that if the difficulty is way too high and the price is way too low, you're not making money. If the price is way high and the difficulty is way low, well, then you're making a lot of money, and then everybody's just going to hop onto it and raise the difficulty. So it has to be sort of an even amount, it's looking real grim right now, but keep on hodling, guys. Everything's fine. Nobody's worried about the market right now, but either way, to be realistic, though, this is probably just a slump from the Bitcoin Cash thing and the futures expiring, and eventually we will see a new all-time high sooner or later. We'll have to see what the Bakkt futures do. We'll have to see what 2019 brings us, although I have a feeling that 2019 will also be somewhat of a lame duck year, just like 2018. I can't even tell you any significant events that happened in 2018. It's just basically a lowering price throughout the entire year. There was no real bull run, except for maybe at the beginning a couple times, but for the most part there was no bull run. We still have December to look forward to. We could see what happens then, but either way, I hope you guys enjoyed this video, and as usual, I will see you guys next time.